The macro view is improving. We're seeing better price action. Market concerns around tariffs and the government shutdown seem to be abating. The Fed cutting into steady inflation should be considered negative for the US dollar and positive for crypto.
Now, will 2 rate cuts before the end of the year spur the cryptocurrency market higher, or have we hit a cycle top? Now, today we'll discuss all of this and more on the BeInCrypto Podcast with Grayscale Head of Product and Research, Rayhaneh Sharif-Askary. Ray, it's great to have you back on the show.
It's great to be back. Thanks for having me.
Ray, thanks very much. Okay, so let's look at where we are at the moment. Now, the Fed is likely going to enter 2026 with a target rate of around 3.5% to 3.75%. And then we also, in addition to this, we have warming trade relations with China, with Trade Secretary Scott Bessent signaling that there's going to be deals basically being made. Now, are we seeing institutions quietly rebuilding their crypto positions, especially after the crash on October 10th, in anticipation for more favorable environment in the new year?
It's true. The macro view is improving. We're seeing better price action. Market concerns around tariffs and the government shutdown seem to be abating. We're seeing less delevering in perpetual futures. All else equal, the Fed cutting into steady inflation should be considered negative for the US dollar and positive for crypto. That said, it is possible that rate cuts are already priced in for the next 2 meetings. So the backdrop is getting better. In our experience, investors have taken more of a long-term view, and we are seeing more engagement. We're seeing consolidation. And again, the factors that make Bitcoin a unique asset class, the fact that it is a store of value, there's that technology upside, and the potential for portfolio diversification continues to make it an attractive asset for institutions looking for long-term exposure.
Yeah, like you mentioned there that it's a negative for the US dollar. You know, we're moving into an era of lower rates. Do you perceive any kind of sentiment that there's going to be a soft landing for the US economy? That's sort of laying the groundwork for, I suppose, more risk, or an appetite for more risk?
Yeah, so from my perspective, fundamentals seem strong. And so I am generally bullish risk in the intermediate term.
Okay, so let's actually delve into like some of the products that are coming out of Grayscale. For instance, GDLC, which holds a mix of Bitcoin and Ethereum, and emerging layer ones like Solana. Now, how does the Grayscale decide the right balance of these? Market narratives always shift. You know, investor appetites always change. So is there like an ongoing appraisal of the right mix to, for GDLC to have?
There absolutely is. And it's market driven by default and dynamic by design. So GDLC provides access to 90% of the crypto market's capitalization in one fund. It tracks the CoinDesk 5 index. It's built to reflect Bitcoin leadership and scale while providing exposure to other crypto. And generally, given that it is market cap weighted, investors are always getting exposure to the top assets. So as the market shifts, so too does the product. And so each, their Bitcoin is the biggest component. Right now, Bitcoin is about half of the crypto market cap overall. As we said, it's a store of value, a potential hedge against monetary dilution, and a macro hedge. Ethereum is meaningful in the fund. It's the prevailing smart contract platform. Solana is a high throughput layer 1 smart contract platform that is emerging and that has significant market capitalization. And then we have XRP and Cardano. Ultimately, through GDLC, we are ushering in the era of crypto index investing.
Yeah, so it's an index that will you start to expand that product into other digital assets, or do you think it's going to be sort of rigidly kept with? You mentioned Bitcoin, Ethereum, Lama, XRP, and Cardano.
So the underlying index itself is designed to capture the top 5 crypto assets by market cap. So as market narratives shift and investor demand shifts, the product should reflect that.
Oh, okay. And at present, you mentioned there Ethereum obviously is the the premier smart contract layer one at this moment in time. Do you see that changing at any point, or do you think that's going to be kind of a sustainable thing in the months to come?
I think there's always going to be a place in investor portfolios for Ethereum. Ethereum is a leader by market cap, by total value locked. I also think that investors should diversify into other high throughput, faster, lower fee, smart contract platforms like Solana, like Sui. I think these different platforms do different things, and they all have a place in an investor portfolio.
Okay, let's discuss Grayscale's product life cycle. For example, GBTC successfully uplisted, as did GDLC, from a former private placement. Do you see this as like a positive and encouraging signal for the digital asset market as a whole?
I do. It's encouraging, and it's encouraging for us to see that we're able to progress these products through their life cycle and continue to bring them further into the regulatory perimeter and give more capital markets access. So for instance, we touched on GDLC, that's trading as an ETF now. The most recent win is GSOLE, our Grayscale Solana trust, which has now become a staking Solana ETF. And my hope and expectation is to continue to bring more products through from their first phase as private placement to public quotation, ultimately to ETF.
So, Ray, you mentioned staking there. How far have regulatory frameworks advanced in terms of allowing staking for ETFs?
We've come a long way. And staking is so important because it's turning crypto into an income generating asset class. And as we build products, we want to make sure that we return that income stream to investors. So we have the only staking Ethereum ETFs in the US. Our Solana ETF is staking. And historically, staking was not allowed in ETFs because of the perception of liquidity mismatches. Because as some people may know, when tokens are staked, they have various unbonding periods that can make it hard to honor redemptions. Grayscale and other issuers met with regulators. We helped them to understand the asset class. This is not a problem that's unique to crypto. Leveraged loan ETFs have been contending with this for a long time. And that resulted in the generic listing standards in September, which allowed staking. And anecdotally, when we worked with the crypto task force, we found that if half of the Ethereum and ETFs at the time had been staked for 10 years, that would mean $5.5 billion of incremental returns for investors. So staking is very important. We're very pleased with the progress to date. And I'm working to continue to integrate staking into all of our products. Staking is definitely a priority for us.
Well, it sounds like it's a task of educating the regulators in kind of moving into these areas, moving into the unknown, stepping into the unknown, I'm sure. And finally, Ray, okay, so the market is bracing for 2 rate cuts before the end of the year. Like, really, if you look back at the last 10 months since January, the cryptocurrency market, especially Bitcoin, has outpaced most other assets. Now, do you worry actually that this is kind of like a top signal for the market? Do you think we're getting to the end of this current cycle?
So I do like to look back, but I always like to look forward and remember that the future is necessarily different from the past. And every cycle, so to speak, we see different levels of adoption. And so now we have crypto ETFs. We have a regulatory backdrop that is very favorable. And so I sort of take the contrarian view that we need to transcend from this whole cycle thinking. I think a lot of people think in terms of the 4-year Bitcoin cycle, and maybe that makes them reluctant to allocate capital because they feel the shot clock is running out. In our view, cycles don't die of old age. Fundamental trends are still positive. They're pointing in a good direction. And this is a good place to allocate to crypto, especially certain alternative tokens, altcoins, which are down a lot. So in my view, I think we need to get out of the cycle thinking as Bitcoin and crypto continues to evolve as an asset class. And I think that the cycle narrative can often become, unfortunately, a self-fulfilling prophecy.
Yeah, that is interesting because obviously things have changed. It's not like the same cycle conditions are present every cycle, like there's so much more macro impacts on the market now.
Exactly. And demand drivers.
Yeah, there's a lot of different demand drivers. Now, just to sort of like wrap things up, in terms of the cryptocurrency market and in terms of, I suppose like investor sentiment when it comes to altcoins and stuff like that, do you foresee, for instance, the GDLC staying with, or, obviously it changes with the top 5 cryptocurrencies, but how long do you think it's always going to be like Bitcoin, Ethereum, Solana, XRP, and Cardano? Do you think that's going to last, or do you think that has a sort of like an expiry date also, and there's going to be a shift?
I think anyone really knows, but the beauty of this market is that it is nascent, it is emerging, it is volatile, and all we can do is help to educate investors and give them access through the types of exposures that can help to reflect what is going on in the market and market trends.
Well, Ray, thank you very much for coming back on the BeInCrypto podcast. It's always great to hear your insights.
Thank you for having me.
If you want to hear more great insight from BeInCrypto, please click the subscribe button.